Hey everybody, what's going on? It's James here with Crypto Common Sense, and I have a Bitcoin / cryptocurrency market update for Saturday, May the 29th. Before I jump into the content for this video, please do me a huge favor. Hit that thumbs up button, make sure you subscribe to the channel, and don't forget to check the description for a link where you can join Patreon for just $7 a month. Once we get up to 500 members in the Patreon, I'll start creating some software for you guys and gals that you can use in your trading. What I wanted to do today was sit down and talk about Bitcoin, because Bitcoin is actually looking a little bit, worse for wear. It's not doing what I had hoped, and it's doing what I feared. And let me explain what that means. If you watched the past videos, I had said that if this was Wyckoff distribution and it played off like Wyckoff, we may not get the bounce that I was looking for toward 45 to 49,000. It may actually get stopped around 40,000. Well, that's what happened, right? It bounced up, tested the 200-day moving average, and that's a simple moving average, and was clearly rejected by that average from the top of this pump, which was right at 40,904, fell almost 18%. Again, we were already down, right? And now here's another 18% drop. So this is being pretty brutal, and the bulls just can't seem to step up. If you look at this, just no real bull activity. They're gone. No one's seen the bulls for a while. And I'm not poking fun because, like I said, I actually wanted this to bounce to 45 to 49K, and I'm still holding out some hope that that's what happens, because if not, I'm going to end up writing down the Bitcoin that I still have left in the HODL portfolio. If I can get an obvious place to take a positional short, it doesn't mean I have to sell my spot. I can still hold it, but I can at least hedge it with a short position so that it's not actually losing US dollars. But if it just drops from here, the risk-reward ratio is a little bit skewed, which makes it more difficult to open up a hedge, because then it could possibly still pump up, and then you're hedged, and you don't know, is this, the dead cat bounce, or is this going to continue going, and it makes it a little bit more difficult. So, not laughing at anybody, not poking fun at anybody. If you're down, I don't get anything out of people losing money. It doesn't do me any good, so I hate to see that. But people have been very, very confident, very, very cocky in this market, and I think the market's, slapping them upside the head and saying, look, nothing goes straight up forever. The one thing that I wanted to really sit down and shoot this video about was the differences between what's happening right now and 2013, because one of the theories that I had put forth, and I wasn't the only one, other people obviously were spotting this as well, saying, look, this may be something similar to the summer of 2013, where it ran up to like $250, $260, and then it fell like 80%, and then it ran up to over $1,000. And that was some really nice hopium that we were all kind of clinging to. But the charts don't look anything like 2013 at this point. There's some major differences. So this is a Bitstamp chart, because most of my charts are Coinbase, and it doesn't have history from 2013. So I'm going to have to redraw some stuff on here. So let's put RSI on the chart. Okay, so let's take a look at this. This is a weekly chart, and remember, we had a bear market box that looked like this, and we weren't supposed to break down inside of this box unless it was a bear market, which we did. It looks a whole lot like back here in 2020, right? A whole lot like that. Once you break into that box and stop bouncing on top of it, it's a sign that the bull market is over. So, okay, fine. We're in a bear market. At this point, people are still trying to argue with me. James, it's not a bear market. Guys, it is a bear market. Like, you can't argue facts. A bear market, by definition, is a market that takes more than a 20% drawdown amongst negative sentiment. I would say things like the economic concerns regarding Bitcoin mining would be negative sentiment. I would say things like China, banning companies from working with the blockchain, or I don't even know what they did, right? Because I don't care about all that news. But whatever it is, the FUD that came out of China about, oh, they can't do crypto or whatever, that's negative sentiment, right? It is a bear market. It's not up for debate. It's not, oh, James is crazy. It's a bear market. Can it go up from here? Sure, anything's possible. Just like this spec here. This was a bear market too. It had a V-bottom recovery. This could V-bottom, right? It's unlikely, but it's possible. But there will be people who come back if this was to be bottom and say, I told you it wasn't a bear market. Well, it was. So congratulations. You were still wrong, right? If we pull this thing back and back and back and back, we can see how well this worked even back in 2014, 2015, and we go all the way back here to 2013. Now that giant pump in the summer of 2013 is this pump right here. $260, it rose from like $10, right? 20x return type of stuff. And then bam, 80% collapse. But look where the 80% came down to. Right near the top of that bear market box, which we know is historically support. It did not chop deep into that box. It barely dipped inside of it and came right back out of it. Now, compare that to what's happening right now. So this little bitty dip to this. Nothing similar about those guys. Nothing, right? And I'm not saying RSI is the end-all be-all, but if you've been watching this channel for the last 4 years, you know it's pretty damn good when you put technical analysis on the RSI versus trying to use it in that goofy over 70 under 30 type of way that people try to use it. Yeah, you try to do that overbought and oversold stuff, you're going to get completely destroyed if you try to do that in the simple format. You've got to put technical analysis on RSI, right, for it to really be worth much. But there you have it, right? This came right back down inside the box. I am still waiting, and I am going to be patient. I still want to see this thing bounce back to the top of the box, get that bearish retest, and then get more downside, right? Not that I want more downside, but that's what I expect to happen. I expect it will come back up to retest this point. And if I had to guess, guys, and this is just a guess, I think this is probably playing the same type of tricks it played back here. I want you to go back in time with me, okay? If you were watching the channel back here, you guys will remember I called this dump. And I had said when this was consolidating, look, if you're a bear, don't be getting froggy here because this has, this has the potential for a nice bounce here. Well, what happened was they put in this little fake bounce, which was up to around 8,800. And then I started to think that I was wrong. I thought, gosh, I guess it's not going to get up to my original target, which was up around 9,500 or so, which was right there. Okay. So when this thing started to pump up, what actually happened was I started shorting it through here like a goofball, right? Because I got impatient and let this candle fool me. All I needed to do was wait for the retest of the RSI box and the retest of this target that I had been talking about for 2 months. And if I had done that, instead of losing money on the pump, I would have actually been able to long that pump or sit out, right? Depends on whether you're comfortable trading against the trend. I am, right? I think that there's a lot of cliche sayings in markets that aren't based in reality, like don't fight the trend. Well, you're almost always fighting a trend. It may be in an uptrend on a weekly chart and a downtrend on an hourly chart. It may be in an uptrend on an hourly chart, but a downtrend on the daily chart. There's always multiple trends happening. So yes, this was a downtrend, but there was actually a bunch of reasons to go long back here. But that's what I'm wondering. I'm wondering if we're getting this type of bounce here where people were trying to long it, they're going to get washed out, and then bears are going to be, quick to short it thinking, okay, that was the bounce, and that's when we go up to that 45 to 49K. That's what I'm wondering, right? And as a side note, I freaking love TA because TA doesn't lie. Look at this channel, right? This was the weekly channel on Bitcoin in 2019. Look where it came down to in March. And if you drew this on a little bit less exaggerated channel, a little bit smoother channel, same deal. Boom, close right inside of it, right? So again, this nonsense about don't fight the trend, and I shouldn't say nonsense, this idea about not fighting the trend, well, I think everybody would agree that it would have been okay to long the bottom of the channel there, right, at $5,300, wouldn't it? So that's kind of what I'm wondering. I'm wondering if we're going to get a bounce similar to this back here, right? Maybe this was that first bounce. Now bulls are trapped. They're going to get washed out. It's going to go down a little bit. Bears are going to get over exuberant, try to short it, and maybe that's the liquidity that we need to finally go back up and test this zone through here, get my magnets. Kind of messing things up. I think I'll go a little higher than that. Something like that, right? That's what I'm thinking. Could I be wrong? Sure. Absolutely could be. But I think when you look at the, the bubble charts and things, I'm still sticking to my initial idea that, this was euphoria up here. Or I don't know that it was my initial idea, but I'm still sticking to the idea that I posted last week, that this was euphoria up here, that we need to get some type of complacency bounce. It may take a few weeks to play out, right? Get some kind of complacency bounce up into this zone of supply, and then that bear market really take hold. Alternatively, that other theory that I had was that, I'm just trying to erase this one line, goodness, that this up here might have been complacency right here, and that this is already the bear market kicking off, and we're more in anxiety, like why is this dip taking so long type of territory, which would be like, maybe this area right here back in 2018, and maybe more like this area over here in 2019. So we'll kind of see, but right now there's just not a lot of positive things to say about Bitcoin. I'm going to jump away from the Bitstamp and talk more about my Coinbase chart here. So obviously we did have some demand down here, right? This old zone through here where some trading happened. It did find some support in there. It tried to balance out, but it's been unsuccessful so far. We're still underneath the 19-week moving average. So again, right now that's sitting around 49K. I still think that's going to get retested, like I said. The weekly volume, it's still selling volume, but it could flip green before tomorrow. It's, if it even if it closes as selling volume, it's less than it was last week. So that is a sign that bears are starting to get somewhat exhausted. So that's a good sign for the bulls. If you look at a 3-day chart, what we're going to see is, let me get some of these lines off of here. The same type of, price action as the weekly chart. But when you look at RSI, we can see that we're sitting right just sneaking out the bottom of this box with about 27 hours to go. I do not expect this to close outside of this bear market box. Just like I didn't think it would close outside of it back here. I think it probably will tuck back inside of it. We'll probably end up with some type of double bottom on this box, and then we'll get some type of move up, right? Because historically, we don't see this close outside of this box unless it's a capitulation event. And again, if it's a capitulation event, if this does go down and say close at 25K or something, then it would throw off a lot of this analysis. And it might actually, and I'm not saying it would be, we'd have to look at the chart and the structure and things like that, but it might actually be a buying opportunity on Bitcoin if it capitulates here, right? 2018, sneaking out of the bottom of that box, boom, buy signal. Same thing in 2020. So something to keep an eye on. If we take a look at the daily chart, same old stuff, right? Underneath the 200 moving average, underneath the 50 moving average, 50 is curling down pretty hard now. If it continues at that pace, we'll end up getting a death cross on the daily chart, so that'll be interesting. We take a look at the CME chart. Just going to put price on here. Obviously, people have probably forgotten all about these gaps, but we'll talk about some gaps. This was the 200-day moving average on the CME. We got a very strong reaction off of it. If this does lose the 200 daily, we've got a gap sitting down here around 24K, right? Price gap back here, see it? We've got this one down here, which is around 18K or so. Got to zoom in to be able to see these right there. And we've got this tiny one down here around 9,600, which was never filled in, right? So all of those gaps could quickly come back into play, and we could end up seeing this be that wonky head and shoulders we've talked about in previous videos, okay? Again, still not ready to open a positional short. You can scalp short. You can take some, swing shorts that maybe last a few days, or you could have during this last week or so. But as far as trying to open a short here and ride this way down, I don't, and this is for me, not you, I don't personally think it's time for me to do that. I think the time to do that is after a stronger bounce. All right, so that is the CME chart. We could jump down into some smaller time frames, but it's really just going to be more of the same noise. Right now, it's a waiting game. And most often when you do get a range break, like we got up here, the safest, most conservative place to look for the trade is on the retest of that break, which again is going to be up between 45 and 49K, right? A lot of my non-trading friends have hit me up, and it's like they want to know what's going to happen, right? So back here, they were bullish, and I was saying, look, I think the bear market's getting ready to start, and it went down. and they were buying the dip, and then of course it bounced, and hey, did you buy the dip, bro? I'm like, no, I didn't buy the dip. You know, came down here. I actually did buy some Bitcoin down here. I bought some OMG down here. I bought some EOS on this drop, right? Sold all 3 of those positions now. But when it started to go back up, a lot of my friends were like, I thought you said this is a bear market. You know, look, it's already up 30% and 40% and 50% on some of these altcoins. And I'm like, yeah, that's what happens in markets. They don't move in straight lines. That's why people get trapped. If it just kept moving down, nobody would be buying. People buy because it starts to go back up and they think, oh gosh, I got to hurry up and get in. That was the dip, right? And then they get trapped. So I still think, you know, there's a lot of people who are new to this market and have only experienced the euphoria of a market that goes up, 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 up faster than you can believe, right? They've yet to experience the pain of a market that goes down 80% over the course of 12 months, right? And I think a lot of people are about to learn that lesson in a very, very painful way. So, and that's not arrogance, right? That's just the TA. That's what the TA says. I want to reiterate that I'm not rooting for that to happen. I have some business stuff that will do better in a bull market. For example, there's a piece of software that I've been developing now for about 13 months, right? We're getting pretty close on that software, and obviously it's going to sell a hell of a lot better in a bull market when people are making money hand over fist than it is in a bear market where people just lost, you know, 50, 60, 70, 80% of the portfolio. So yeah, both from a business perspective and from an investor perspective, I'd really like to see this go up, but I just don't see anything in the charts that make me, you know, think, hey, this is a great time for me to be buying cryptocurrency. So we'll see. We'll see what happens. Main thing that I would caution people is make sure that you're not the one that's being played, right? Make sure you're not the one that's falling for the traps being set, whether that's a bull who bought on this bounce thinking it was going to keep going up and now you're underwater, or whether it's a bear where if they send this down here and you think, okay, it's going to break through 30K this time, and then you get short at 30K and next thing you know it's 50K and you're like, what did I do? You know, I just lost 67% because I didn't use a stop loss, blah, 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 right? Just be careful. It's a dangerous market, especially for newer people who haven't been through these types of cycles before. And again, not being arrogant, I learned the hard way, right? As my business partner likes to say, been there, done that, got the t-shirt. Don't care to do it again. All right? So I'm going to go ahead and wrap the video up there, guys. I hope you enjoyed it. I know it's not the most refreshing look at the market, but it is my particular opinion on it. It's just that it is an opinion. So remember, I'm some guy sitting in a spare bedroom, which means I've been wrong before. Guarantee you I will be wrong again. That's the only guarantee I can make you. You should always go out there and do your own due diligence. You should seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, or precious metals. If you enjoyed this video, be sure and give it a thumbs up and make sure to subscribe to the channel. Also, don't forget to check the description for a link where you can join Patreon for just $7 a month. Again, the first major milestone we're shooting for is 500 members so that we can take that money and use it to pay the salary of the developer so that we can start cranking out some tools for our followers. All right? I say "our" because I'm doing a lot of stuff with a partner now who's also a full-time trader. So, all right, that's it for now. Hope you guys enjoyed it. As always, please remember to trade safe.